Hello guys, it's Max here from Daily Market Movements. Today it is the 20th of October 2021. It's a Wednesday, which means one thing, it's video time. On Monday I posted a video sharing with you all my expectations as to where I believe the markets may go this week. And then of course, just like every other Wednesday, I just check in with you guys for that midweek video where we just analyze what the markets have been doing on the Monday and the Tuesday. And I explain to you all and share with you all where I anticipate the markets to go going into Friday. And then just like every Friday, I post that video at the end of the week where I conclude this week's market movements. So we're going to go ahead and start with the gold markets, and then we're going to follow that with the Nasdaq100, S&P500, crude oil, and last but not least, the Euro-US dollar. But just before I start today's video, I just want to start by saying a massive thank you and a huge welcome to everyone who joined our Signal service. For those who do not know, if you would like to follow my trades more specifically, then you can do so by heading over to my website, dailymarketmovements.com. I've left the website link in the description of this video. This is where you can join my Signal group. I just want to make it clear that everything you're about to hear on this video is not financial advice. I just share with you my, my take and my bias on the markets. And if you do want to copy me, then that's up to you. But by all means, I do recommend doing your own research before taking any trades. But if you would like to follow my trades in more depth, then please head over. I charge a very small fee of £249. And once again, thank you to that large number that have joined my service from Monday onwards. So let's start off with the markets. In front of me at first, we have the gold over the US dollar chart. Gold has performed very well this week. On Monday, we had a huge tick towards the upside, and then we pulled back and we kind of formed this shooting star candle, which is typically bearish. And I was slightly worried for the gold market, but during today's trading session, we've smashed it out the park. And in fact, we're currently trading towards the upside of that shooting star. So this is in fact very bullish. Again, we have broken through that 23% Fibonacci level, which is this red zone. So we've sliced through that. And more bullishly, we've actually broke through that 50-day EMA. So this is very encouraging for the gold markets. This does indicate that prices should move higher over the upcoming days. I think the target now is up towards 1793. That's where the 200-day EMA is. If we can break above the 200-day EMA and break above last week's swing highs, which was up at 1800 exactly to the penny, then I would, I would really like to see the gold markets go and target that 1830 area, which is all the way. That 1830 area, which is all the way up near this B zone. Remember, we are currently trading in this ABC correction pattern, and we have struggled to break above that B zone. So this is very, very bullish for the gold markets going into Friday. I do fully anticipate to see this market continue towards the upside and go and target that 1794. Whether we can break above that 1794 is still a question to be asked. If we do, then as I just mentioned, 1830 is the next target. But I'm also going to cover the downside. If we do get rejected there, then I think we go down towards the 50-day EMA, which is down at 1776. Where we were trading at this morning. And if we break below there, then I think we go perhaps down towards 1750, but that is an area where we've had plenty of noise. We've bounced on many previous occasions. Back on the 29th of June 2021, we also bounced on the 16th of September this year, the 12th of October. So it's very supportive. So that is an area where you should find a bid. So that's where I currently stand with the gold market. It's very bullish that we've broken above the 23% fib level, and very bullish that we've now broken above the 50-day EMA. And the 200-day EMA, I'm just going to widen this circle, is now the target. Let's move over to the Nasdaq100. Now, very flat day today. For the Nasdaq100, we're currently trading at 15,409, but this is to be expected. We've had a fantastic 5-day rally here from the Nasdaq100. Don't forget, we were trading down near that uptrend line that we had bounced off previously. That's where I bought the Nasdaq100 down at 14,400. I sent a signal out to my Signal team who made a significant amount of profit. That trade is still live. I am targeting towards the all-time highs up at 15,700. So we're just 300 points off my take profit. That's what this profit, this red and green zones indicate. The bottom of this red zones where my stop loss is, where I bought at 14,400, I was risking 4.35% towards the downside, where my stop loss was at 13,800. And towards the upside, I was looking to gain roughly 8.92% when my take profit is up at 15,700, as I just mentioned. And with us trading now at 15,400, this means that I'm only 300 points away from hitting my take profit. We are now in the middle of earnings season, and I am anticipating some fantastic numbers from some of these massive FANG and tech names out there, so that could be the catalyst that really sends Nasdaq100 back towards its all-time highs. And don't forget, guys, the fundamentals are looking fantastic. We're still trading in that low interest rate environment, which is key for these high growth stocks to perform well. Moving over to the S&P 500 now, very similar to the Nasdaq100, but I have indeed hit my take profit. I was targeting those all-time highs for the S&P 500, and today we have hit that 4,500 area. For those who do not know and are new to my channel, I bought the S&P 500 on the 50-day EMA down at 4,400 with my take profit up at 4,500, and I had my stop loss just below these swing lows. So it was roughly a 2-for-1 risk reward ratio, and I'm very happy that has gone ahead and hit my take profit. So with the S&P 500 trading at the all-time high as we speak, I am happy to kind of just sit on the sidelines and watch this continue to rise. I do believe that we will create a brand new all-time high for weeks to come, but the risk reward doesn't look very attractive to me at these current levels. So I'm just going to sit on the sideline, wait for that pullback, and if we get a pullback towards the 50-day EMA, that's an area where I would be willing to buy the S&P 500. But until then, I'm just going to be sitting on the sideline. But a huge congratulations to all my Signal team who managed to capitalize on that trade, and a massive well done to everyone who follows my YouTube channel. And I've had many messages throughout the week with people saying a massive thanks. So it's fantastic to see that my viewers here on YouTube are making money from watching my videos. So well done to everyone who managed to profit from that trade. Crude oil, very interesting during today's trading session. We had that fall down towards $80.88. That's probably due to the RSI being very overbought up at 75. I do still anticipate a further fall. I think that we go and test $80 as the new floor of this market. I think eventually we got up towards 85, but the RSI, look at it, guys, it's up at 75. What has happened on previous occasions when we have been at this 75 area? Well, let me just circle it and show you. We have seen declines. That's what this movement is here, and of course here, where you've just seen that massive top to bottom movement here in the crude oil market. So I'm not saying that crude oil markets are going to completely crash here. That's not what I'm saying at all. But all I'm looking for is a retest of that $80 a barrel level, which is this white line here. And we nearly got there during today's trading session with that move down towards $80.90. So I'm just looking for that little bit further of a pullback down towards $80. I do think it will come with the RSI being as overbought as it is. We've seen this fantastic run in the crude oil markets, but unfortunately, markets do not just go up and up and up forever. They do have pullbacks, and in a bull run, pullbacks are in fact healthy for the market. It allows other traders to get involved at lower prices, and it just causes more of an uptrend overall. So very exciting here for the crude oil markets. I am bullish in the medium to longer term, but short term I'm bearish. I currently have a short position here, and so does my Signal team, and nearly hit our take profit today. Again, guys, this is the reason why you should be involved in our Signal team. We are doing fantastic on all markets at this moment in time. Heading over to the last but not least, the Euro US dollar. We are flying here in the Euro US dollar. Very interesting. We have now broken above that support. That was my buy signal. I've just bought for Euro US dollar. I'm now targeting up towards 1.17. That's where the 50-day EMA is. And of course, that marks a 38% level here on the fib chart from that retracement I pulled. I really am bullish here for the Euro US dollar. The Fed has done a significant amount of printing over the past couple of years, with all these massive stimulus deals and grant checks for businesses and individuals. So there's been an incredible amount of printing going on over in the US and of course most other countries in the world. But the US really is the country that has done the most printing, and that is really going to hurt and damage the demand for the US dollar as we go into the near-term future. So I really do prefer the euro over the US dollar for the medium to longer run, and short-term I do like it as well. I think we've got up towards 50-day EMA. Eventually we break above the 50-day EMA. That's when I anticipate a move where we go and test that 200-day EMA, which is all the way up at 1.18. And if we break above that 200-day EMA, guys, we only have that 23% fib level to break above. And once we're in that red zone, we go and complete the whole fib retracement and we go towards that 1.23. Now, those who've been watching my YouTube channel for some time, you know that I have had a 12-month price target up at 1.22 to 1.23, and I do fully anticipate that we will achieve this target within the next 6 to 12 months. So I am very, very bullish here for the euro US dollar, and I anticipate a very large bounce here. So I'm very bullish indeed. So that, I'm going to wrap it up there, guys, for this Wednesday's video. Of course, I will do a video on Friday recapping and concluding on the movements that we've seen this week. But if you would like to follow my trades, more closely, then please go and visit my website. As I mentioned before, I've left the link at the bottom of this video's description. It will take you to this website where you can go and read much more information about the service that I provide. And the joining fee is only £249 for a year's membership. So that's one good trade. It really is very, very cheap indeed. And I look forward to welcoming you all to my Signal team. Thank you very much for watching. And if you haven't yet done so, then please subscribe and give this video a likes up. Enjoy the rest of your week, guys.